With 2023 almost behind us, in today's video, I'm going to do some prep work for 2024. We'll make a list of what are some of the seasonality patterns that we should be aware of in 2024 for the three major index markets. Now, to gather this data, I'm using our free seasonal analysis indicator. You can download it for free on our website if you don't already have it. That's tosindicators.com/indicators/seasonal-analysis. And there, if you click this big green button, you can download the indicator to follow along. It's completely free and it will help you build a better profile for whatever markets you like to trade. Now, if we start first with the S&P 500, here I have a list of all 12 months inside of the S&P, along with how often that particular month is a green month, meaning how often does that month close above where it opened to start off the month, and what is the average gain or loss percentage for that particular month. And again, keep in mind, this is using 20 years worth of historical data, and we've tried to keep that very clean and sum it up in this nice 3-column table. Now, if we start by taking a look at the best months in the S&P, very clearly it's April, July, and November. All three of these months, you can see 80% of the time, we tend to close above where we opened, so you have consistency. And if we take a look at the average gain here, 2.11%, 2.27%, and 2.29%. Everything else here doesn't really come close to either one of these 3 months. So the best months for the S&P 500, April, July, and November. Now, what happens if we flip this on its head and try to identify the worst months instead? Well, the worst months are June and September, and September kind of stands out here as one of the weaker months if we take a look at all of the different average percentages here. September is the weakest at minus 1.06%. June also stands out as a negative month, and you can see 40% of the time we close up, meaning more often than not, June is a red month. So June is another weak month that stands out inside of the S&P. So far in the S&P, if we take a look at the strong months, that's April, July, and November. The weak months, June and September. Now let's move on to the Dow Jones using the DIA ETF. You should notice something similar here. Inside of the Dow, same 3 months for the strongest months, April, July, and November. If we take a look at their percentages, you should notice that the green month percentage, or how often it's an up month, is a little bit less compared to the S&P. April's a little bit more at 85%, but July drops from the 80% in the S&P to 69.7%, and November 74.39%. So a little bit less consistent than the S&P 500, but still the same 3 months and still the same level of outperformance, especially if you compare it to some of the other months. So we see the same overlap of the 3 months for the Dow, April, July, November. Now what happens if we take a look at the weak months? Well, the weak months for the Dow, there's one additional one. We have January, then we have June, and then we have August. This list is a little bit different than what we saw inside of the S&P. In the S&P, we had June and September, but in the Dow here, we have June and August, so that weakness comes in a little bit sooner, or starts a little sooner, and we also have the addition of January. So inside of the Dow, we have 3 months where there's weakness. June is the one place where we have the overlap. Now, if we move on finally to the Qs have similar performance for our best months. We have, again, April, July, November. So at this point, we know these 3 months historically are where the S&P, the Dow, and the Nasdaq have outperformed. We can see April, 2.02%, July, the highest out of anything we've seen, 3.29%, and November, 2.19%. Also, the frequency at which this is a reliable signal, you can see almost similar to the Dow. So the point I'd like to communicate is April, July, November, the 3 months consistently that tend to outperform. Now, if we flip the Qs upside down and we look at the weak months, same idea, 3 months here, June, September, and December. June here, out of the 3 months, the one with quote unquote the best performance at minus 0.08%. The weakest month here, September, at minus 0.6%. We saw something similar inside of the S&P here as well. And December gets added on for the Qs. Remember, it was January for the Dow, December for the Qs. So a little bit different there. June consistent, September consistent with the S&P, and inside of the Dow, we had August as the weak month. So now if we take all of the information that we've discussed and we try to build some sort of pattern, some cheat sheet that we can use, this is how I would simplify it. Our strong months that we want to look for strength inside of the major index markets, so the SPY, DOW, and Nasdaq, are April, July, and November. The weak months, to me, that I'm going to pay attention to, June and September. June was the one constant across all three index markets, and September looks to be one of the weaker months, especially when you look at the S&P and the Nasdaq. So there you have it. These are the seasonality patterns that we've derived using data in our free seasonal analysis indicator to build a profile of what we expect to happen in 2024 and to be prepared for whatever scenario gets thrown our way. I hope you found this video helpful. Take care, everyone. Good luck trading, and I'll see you in our next update.